Hello, good morning everyone. Welcome to Phillip Securities Research Morning Call for 30th of January 2023. For today, we have quite a few stock counter updates like Microsoft, Netflix, and REIT stocks, as well as technical analysis updates. And as usual, we would end the session with Singapore Weekly, Week 5. Let us get started with Microsoft. Last week, we had released a report on Microsoft's second quarter results. Overall, the results they were within our expectations, with the first half 2023 revenue and PATMI at about 48% and 46% of full year 2023 forecasts. For the second quarter, its total revenue grew by about 2% to 52.7 billion. This was the slowest growth since 2016, and this was mainly because of 5% foreign exchange headwinds as well as a weakness in PC market. Meanwhile, PATMI fell by about 12% year on year due to higher operating expenses and tax rates. Additionally, in the second quarter, the company had recorded a one-time charge of 1.2 billion associated with its recently announced job cuts. So excluding this one-time item, its adjusted PATMI fell by about 7% year on year. Moving on to the first positive, cloud, it remained the fastest growing segment for Microsoft. In the second quarter, its Azure revenue grew by about 38% year on year in constant currency. Note that the company does not report Azure revenue in dollar terms. So this was ahead of company's guidance of about 37% growth rate. And this was the solid growth was mainly because of strong demand for cloud services, and mainly because of digital transformation trends, and the companies they look forward to reduce costs. So overall, the Azure growth, revenue growth, it helped to grow its intelligent cloud segment revenue by about 18% to 21.5 billion US dollars. And secondly, it's a productivity and business process segment. It grew by 7% year on year. And this segment, it includes Office 365. So Office 365 commercial revenue, it grew by 18% in the second quarter. And this was mainly because of a surge in its paid users by about 12%. And also with the growth in average revenue per user, mainly because the company, mainly because its customers, they.
Ambrish, your audio is fading in and out. Your audio is a bit in and out. Yeah.
Oh, okay. Just let me check. Is it fine now?
No, I think it's still a bit dim. Yeah. You wanna try again? Sorry.
Yeah, sure. Is it fine?
Yeah, it's still like fading here and in and out. Yeah.
Okay.
Okay. Or why don't we pan it over to John first, then you try to log back in, then maybe the audio is better.
Yeah, sure.
Okay, thanks. John, can you just go ahead, then Ambrish can log back in. Yeah.
Sure. So I'll start with Netflix's fourth quarter earnings. They issued earnings a couple of Fridays ago. In terms of their fourth quarter earnings and revenue, sorry, next slide, please. Yeah, this kind of came in line with our estimates, excluding one-offs. In terms of their fiscal year 2022 revenue and PATMI, it also came in at 100% of our forecast for 2022. You can see over here, adjusted PATMI was down 91%. But if you take the adjusted PATMI, which is the you remove the $460 million US dollar unrealized loss, you can see that actually adjusted PATMI grew about 3%, somewhat in line with revenue growth, which grew 2% or 10% in constant currency. So Netflix actually had a 8% FX headwind for the quarter. In terms of the main, I guess the key thing from their results was membership additions. So the Netflix recorded 7.7 million membership additions versus about 4.5 million expected. So they outperformed by quite a bit. In terms of of these additions, 3.2 million of it, or almost half of it, came from the Europe and Middle East and Africa regions, while Latin America and Asia Pacific both contributed about 1.8 million additions each. So in terms of their fourth quarter membership additions, usually the fourth quarter is the strongest. So it's no surprise that they really kind of outperform the rest of the year at least. And it looks to have kind of worked through most of their subscriber challenge in the first half of 2022, when it was actually losing subscribers. So it had 2 straight quarters of subscriber losses. And one of the main reasons why there was a strong fourth quarter membership addition number was because there was a very good fourth quarter content release schedule, which attracted a lot of new subscribers. At the same time, there was also some positive incremental benefits from their newly launched ad-supported plan, which we don't have here yet in Singapore, but they launched it. It's called Basic with Ads. They launched this in 12 countries in early November, so it's still quite early on. But so far they're seeing strong results, which brings me to my second point. Basic with Ads is actually showing really early signs of promise. Right now, Netflix is actually seeing a very strong user engagement trends, so very similar trends to their existing their existing plans which don't have ads. At the same time, they're also seeing lower than expected switches from users that are currently on your higher premium plan. So when they introduced this plan, one of the main things that they thought they would see were people kind of downgrading from your basic plan or your family plan to this Basic with Ads, because it's at least half the price. But so far that hasn't really been the case. They're actually seeing more people join Netflix as a result, because instead of switching from higher plans. And so these early signs kind of indicate that the unit economics for this Basic with Ads plan remains quite strong and should generate incremental revenue and profits moving forward. Although we do think that the impact of this would remain relatively modest in fiscal year 2023, especially because it's still quite early days for this particular plan. And Netflix is kind of slowly rolling it out to more regions instead of just launching it globally at one go. The third positive that we saw was that Netflix generated $1.6 billion in positive free cash flow for 2022. And this is compared with 159 million negative free cash flow in 2021. So it's kind of turned it around in terms of cash flow. The company also guided to $3 billion in free cash flow for fiscal year 2023, so this year. And there are a couple of reasons for this. First is that they're going to be focusing a lot on higher margin ad revenue from its Basic with Ads plan. And at the same time, it's also launching a new paid sharing program, which aims to reduce some leakage of revenue from users that actually share passwords outside of a single household. In terms of their spend, content spend moderated in 2022, and it was down about 900 million compared to 2021. Next slide, please. In terms of outlook and guidance, Netflix actually guided to revenue, first quarter 2023 revenue of about $8.2 billion, which represents a 4% year-on-year growth roughly, or 8% in constant currency. Like I mentioned earlier, they're also rolling out their paid sharing program towards the end of the first quarter of this year. And the expectation is that engagement is probably going to dip in the near term, but it's going to gradually recover over time, as was the case when they actually tested this program in Latin America last year. So these were the results that they saw, and they also expect similar results once they start rolling out this paid sharing program globally. In terms of operating margins for this year, they expect operating margins to be in the 18 to 20% range, so very similar to 2022 where it was 20%. Overall, we downgrade to an accumulate rating, but we actually raised the target price to $388, up from $364. We increased our fiscal year 2023 EBITDA margins to 64.8%, as we also factor in increasing operating leverage and high margin ad revenue. We maintain our weighted average cost of capital of 12.2% and a growth rate of 3%. So that's all for Netflix. Maybe I'll pass it back to Ambrish if he's ready. Thank you.
Thank you, Jonathan. Am I audible now, John?
Yeah, better. It's better.
So moving on to Microsoft, overall, the results were within our expectations, with the 1H 2023 revenue and PATMI at about 48% and 46% of our overall forecasts. In terms of in second quarter 2023, total revenue, it grew by just about 2% to $52.7 billion, and this was the slowest growth rate since 2016. This was the revenue growth was the slowest mainly because of two factors, because of foreign exchange headwinds and the weakness in PC market. In terms of its bottom line, PATMI fell by about 12.5%, and this was because of its high operating expenses and tax rates. So in second quarter, the company had recorded a one-time charge of $1.2 billion. And excluding this item, normalized PATMI, it fell by about 7%. So moving on to positives, cloud remained as Microsoft's fastest growing segment. So in second quarter, Azure revenue, it grew by about 38% year on year in constant currency. And this was 1% ahead of the company's guidance range. Secondly, this strong growth in cloud was mainly because of continued demand for cloud computing services as the companies they digitize operations and reduce costs. So the growth in Azure, it helped to grow Microsoft Intelligent Cloud segment revenue by about 18% year on year. Secondly, its productivity and business process segment, it grew by 7%. And this segment, it includes Office 365, which Office 365 commercial revenue grew by 18%. And this was mainly because of a rising need to manage tasks, and its number of users, they grew by 12%. Also, average revenue per user for Office 365 grew also because of there was strong adoption. And as the customers, they upgraded to a higher end E5 license. So moving on to the negatives, Microsoft, it witnessed a deteriorating PC market. And so Windows OEM revenue for Microsoft, it fell by about 39% in the second quarter. So this revenue, Microsoft, it basically earns when it's kind of a licensing revenue where it earns from like PC manufacturers like Dell or HP. If they install Windows software on their machines, then Microsoft would earn this revenue. And the drop was mainly because of a weak demand for personal computers. And after a surge from during the pandemic, the need for personal computers, it increased as people had to work from home. And as a result, customers right now might not feel to upgrade their systems as they already have new personal computers with them. And as a result, the demand has reached its pre-pandemic levels. So moving on to the outlook for the third quarter, the company it expects a revenue to be in the range of 50.5 billion to 51.5 billion, with a growth rate of 2 to 4%, and operating income to be in the range of 20.15 billion to 20.85 billion, with a similar operating margin of 40%. However, for Azure, the company expects the growth rate to decelerate by 4 to 5% in third quarter, which suggests an implied growth rate of 30% year on year. And this is mainly because of a slowdown in cloud spending by customers. For third quarter, the Microsoft, it also expects a foreign currency headwind of about 3%. And they anticipate a Windows OEM revenue to fall by mid to a high 30% range. Overall, for fiscal FY23, we expect a revenue growth rate of about 5%. In terms of its valuations, we have lowered our FY23 revenue and PATMI by 4%. And this was mainly because of weak PC market, and also because customers, they are not willing right now to buy large Azure contracts, and they are just looking forward to optimize their existing contracts. They would like to save, properly, efficiently use their existing contracts. So overall, DCF target price, it has been reduced to $298 from $319, and with a weighted average cost of capital of 7.2% and terminal growth rate of 4%. So that's all for Microsoft. I would now like to pass on to Paul for REITs.
Yeah, thanks. Thanks, Ambrish. So, I'm not the REIT analyst because Darren is in the Escort Capital and Escort briefing, so I will just fill up for him. So apologies if I say anything. So the next one will be just Sabana's. Just wanted to brief everyone on very quickly on the Sabana Industrial. It's a partial offer. So if you look at the offer, I think the 5th bullet point, I just go straight to it. So Sabana is an industrial REIT. All the assets is in Singapore. I think it's probably the smallest REIT listed, I think, anyway. So there's a company called Volar that owns 5%. Then they make a partial acquisition, a partial offer to acquire another 10% at 465. So this, just to give some flavor, this is 0.9 times book and 6.6% yield. Compared to the others at the bottom here. So AA REIT is 0.7. The others, one of the other smaller REITs, and the rest are all trading 1.1. The premium is 9.4, and compared to the 2020 offer by where ESR REIT was supposed to merge, this is higher than the 37.7 cents. Again, this is just to update everyone. Again, this is just a partial offer. So Sabana has about $1 billion worth of shares, so they're going to acquire another 100+ million shares at 465 cents. So anyone who holds shares, you can submit, but if the offer is all taken up, only 10% of what you submit will be taken, will be available to be taken over at 465. Next slide. So Keppel REIT, next slide. So for Keppel REIT, the occupancy was stable, and I think essentially everything was more or less stable. One thing good was that you look at the 4th bullet point, their rental reversions was exceptionally strong, about 23% in Singapore. And in general, for office, valuations are stable. So you can see the 5th bullet point, the valuations are up 2.3. So the cap rates in Singapore, office cap rates basically means your net rental yield. I mean, if you buy a house, you get a net rental yield. So cap rates in Singapore is still holding well, about 3.5%. Just as a reference, I think malls in Singapore are trading at 4.5, which is what the SCT recently they bought next at 4.5. I mean, at 3.5 is pretty low considering interest rates, but again, the valuations has managed to hold. The only weakness for them has always been the currency. So in terms of the outlook for office, rental reversions are supposed to be mid to high single digits. I think Suntec's guidance was about maybe 4 to 5% rental. So rental is still strong. The only thing, just for reference, everyone is watching for is the new IOI Central Boulevard, where supply is 1.2 million. In a average year in Singapore, demand for office is maybe 700, 800,000. So this is huge. But the good thing is there was a GOCO Midtown, which was this year, which is already apparently 80% filled. So far demand has been strong. The only thing is people are just a bit more cautious because end of this year the IOI Central Boulevard is 1.2 million square feet compared to usual demand 0.7. So that's a bit of the thing that we worried. So we need to get over this the demand. The yield is about 6%. Let's move on to the next Suntec REIT. Okay, so for Suntec REIT, in general, the results were stable. I think everyone was just watching on their valuation. So for them, the key was the valuations of the property was up 3.3%. Just to give you some flavor, For retail, because this is Suntec retail. So for retail, every segment is doing well. I think rental reversion for retail about 5 to 10%. The only thing in retail for them is the only weak spot in retail is actually food court, and also fitness, because the office crowd hasn't come back. I think occupancy in the office is actually only 50%. So retail everywhere, retail most segments are doing well. So it's only food court and fitness because there's not enough office workers returning. The outlook for them is still slow pace of demand, but they still think rental reversions 4 to 5. And also convention is doing well. And with China reopening, it doesn't mean there'll be more meetings or more MICE events, which is no meeting incentives, conventions, but it will only mean that these events can be bigger, because if you can draw in the Chinese crowd, then all these events can be larger. So everything is stable for them. The talking point for Suntec has always been the capital management partner, because their leverage is already 42, and then their ICR is 2.4. So if they cross 2.5, there'll be some cap in the leverage. So at 45%. So that's the only thing for them. But everything is stable and should be growing for them. Yeah, they're trading about 6.25%. We always think of Suntec as the high beta stock for REITs, because they are the ones exposed to MICE and also exposed to retail. So by the reopening, they should be the one that can also bounce, one of the strongest. Next slide. Yeah, I hand it over. So in general, in conclusion, the main issue for everyone was whether valuations can contract. So in general, most of the Singapore property valuations have been stable. The only parts that have been weak is actually for Mapletree, what they said was maybe the second tier logistics has been weak, where the cap rate has increased. So valuations are down. And the other one would be probably UK. Some of the UK office saw some cap rate expansion, maybe 15, 20 basis points. It's not huge, but valuations are affected there. Maybe they are down 2-3%, but because of the currency, the valuations can drop as much as 9-10%. So the only soft parts for valuation, which the whole market is very concerned about, is mainly UK office and also second tier logistics, second tier city and third tier city logistics, which I'm not sure why they're there anyway. But those are the weak spots. Apart from that, most of the assets are all been stable. FX headwinds. So FX has been the one that has been probably 4-5 percentage points of DPU has been affected, of income because of that. So FX has been a big headwind for a lot of the REITs. Interest rate headwinds also, although it's been climbing, but it hasn't been alarming. So most of the time, I think it will probably jump on 2.8 to 3% or high or low 3s. Of course, don't expect any acquisitions because the interest rates has been so volatile. So none of them looking to acquire until interest rates stabilize. Okay, yeah, thanks. Yeah, sorry, it's a bit patchy here. Not very familiar with this. Yeah, next slide. I'll hand it over to you, Zin.
All right. Thanks, Paul. So now I'll go through the technical analysis section. For Straits Times Index, we actually broke out of the consolidation phase that has been ongoing since November of last year. So we actually broke through the 3,330 key resistance. So with that, we could see the next immediate resistance at around 3,400 to about 3,470 area, where the 3,470 level is the high generated last year in around February. The breakout was also quite significant because we actually broke through a couple of resistances, namely the two trend channels, the one in blue as well as red color. Then we also broke out of this bullish inverse head and shoulders, which is also a positive sign for the index. Meanwhile, if the index does a pullback, the immediate support is likely to be at 3,290 to 3,300 area, where is the previous tag line of the inverse head and shoulders, as well as the previous resistance of the two trend channels. Next slide. For S&P 500 is also positive as we broke out of the key downtrend resistance line. With that, the immediate resistance is likely to be at 4,080 to 4,150 area, where the 4,100 level is a level to take note, which was the highest generated in December of last year, where we tested twice and we actually came down. And the 4,150 level is the 78.6% Fibonacci retracement level. When we take the swing high at 4,325 in mid of August last year, and the swing low of 3,491, which was the swing low in October of last year. For the immediate support wise, it's likely to be at 3,380 to 3,950 area, where is the previous resistance of the consolidation triangle breakout in the chart shown. If we do a retest, as well as the downtrend resistance line, if we do a back test before going up again. So that's for S&P 500. Next slide. For individual stocks wise, the first one will be Mapletree Industrial Trust. So for this, we have a technical buy at $2.32. The take profit at $2.58. Stop loss can be placed at $2.26. The stock loss closed at $2.43 on Friday. So for Mapletree Industrial Trust, there's a potential breakout of consolidation triangle to retest the downtrend channel resistance at $2.58. Because actually price has actually been consolidating, and in the process it has been forming higher lows in recently, which is a bullish sign for the breakout, which actually occurred last week. The MACD technical indicators also displaying bullish momentum with a sustained crossover of the MACD line over the signal line while remaining above the zero line. So with that, the price could retest the 258 level in the resistance zone of 258 to 268, which is confirmed with a previous swing high form in September of last year, and the downtrend channel resistance. When we take the height of the consolidation triangle, which is 26 cents, projected onto the breakout point. So that's for Mapletree Industrial Trust. The next one, next slide. The next one will be Lion Phillip S-REIT ETF. So this is just a ETF that encompasses the S-REITs. So for this, given the bullish momentum in S-REITs, we also saw this ETF broke out of ascending triangle pattern. So for this, we have a technical buy at 94.5 cents. The take profit can be at $1. The stop loss at 93 cents. It last closed at 97.1 cents on Friday. So there's a potential follow through of the bullish momentum following this breakout. It's because the MACD technical indicator is displaying a quite strong bullish momentum recently to support the breakout. So with that, we could see a possible retest of the $1 previous swing high resistance form in September of last year, which is also confirmed the downtrend resistance line. So from the chart wise, it looks like the upside for REITs still can continue a little bit further. Yeah, so this is for the REIT ETF. So that's all from me. I'll hand back the time to Paul to talk about the Singapore Weekly.
Yeah, so thanks, Dean. Next slide. So in terms of our, again, this is our tactical view. So in terms of some of the key macro data coming from Singapore, we had industrial production. So that is still weak, and so that is still sliding for the past 3 months. So industrial production is basically a gauge of manufacturing activity from pharmaceutical, chemical, and electronics. We had some data on property price. So property price was up only 0.4 quarter on quarter. Over the past versus almost 3.8% in the third quarter. So over the past 12 months, property price is just slightly below 9. In a way, this is positive too, because it means there's no risk of intervention, because we were initially worried if the property price replicate what happened in the third quarter, then once you cross double digit, that's where you always worry that over 12 months, double digit rise over 12 months, that's where you worry the government will start considering some intervention. But having said that, it's still what we see is the slowest price increase in the past 10 quarters. In terms of the volumes, it was probably just horrendous. I mean, the volumes was down almost 77% for new launch in the fourth quarter, and for resale was down about 55%. The key data from the US is core PCE, which basically is like CPI, but it's just it's like, CPI, but it's the inflation, which, the Federal Reserve always likes to use, because it's a bit broader measure. So it came out about 4.4, nothing much, but it's just that it's a bit faster than expected. I mean, it's month-on-month is where we watch, and it's up 0.3. So in terms of our tactical views, we think the rally, this so-called Fed tapering or Fed pausing kind of rally or mini Goldilocks rally, we think can still continue. We think the key event for this week, there's a lot of news this week. There's a lot of the FANG stocks coming up, the big tech. On the first Fed will be the main one, whereby the FOMC will raise rates. So we think it will be a 25 basis point increase. One of the reasons is because the two most important FOMC members after Powell, Bernard and Williams, basically didn't push back. They made speeches, and usually they will telegraph a bit that they think the market's a bit too optimistic. So they didn't push back that there's going to be a market is expecting 25 basis point hike in February. For our base case, we still think there will be 3 more rate hikes this year. I think the market is about 2.5 for 2023, because we think the Fed just cannot make a mistake again, because they always said that the inflation was transitory, was very short term. Then they made that mistake, so we don't think they can afford to do it again. And also, when we look at the core PCE, we think even at year end, it's still going to be above their target. So we don't think Fed is going to cut rates, and they probably might raise up to 3 times. The only thing to watch for this week is after the FOMC meeting, there's usually a press conference by Jerome Powell. So the market might be a bit nervous because you're not sure what he's going to say, what is his forward guidance. Maybe he turns very hawkish, and then the market might just sell down a bit in the very near term. So that's the only concern we have. After they announced rate hike, then there's that press conference. In terms of REITs, we still think it can outperform, because investors are still searching for yield and income, because now that interest rates has already been either peaked or already peaking. So in terms of the events this year, of course, will be the Fed interest rate decision, then the big tech stocks, and then we have some payroll numbers. We have quite a few webinars, and you will notice most of them are REITs. Tomorrow we have Comba. Typo here is only 1 O, but it's a Hong Kong equipment company that's selling in China. So they did a dual listing, so we just invited them for a webinar. Then the other one is, of course, Prime US REIT. It's not on Poems yet, but do look up for them, because we're still waiting for them to send us the documents. But then they'll be followed by Paragon and Keppel. So if you have time, do register for all these webinars. It's open to everyone. Next slide. So just to remind everyone, so what is the market expectations? So this is based on the futures market. What is the futures market pricing in for interest rate hikes? So you can see from the numbers in the middle here. So February 23, which is first Feb, market is expecting 25 basis point. Another meeting in March also 25 basis. Then in May, the market is a bit undecided, so it's like 50-50 here. But right now, we still think it's 25 unless we see inflation kind of taper down even sharper. And then the market, rightly or wrongly, is pricing in a rate cut in November, December. Next slide. So in terms of the core PCE, so this is probably the most important macro data to watch inflation. So what we did was that we took the last 3 months, month-on-month, we average it out, and then we just see what is the trend like. I mean, this is only maths, it's nothing fancy here. But if you do that, then you will see that by December, the PCE will still be higher than the red line, so 2.9. So if this trend continues, so it's unlikely that the Fed will want to cut interest rates because it still be above their target. Next slide. Okay, this is just for reference. This is the property market. So is this the lowest price growth in 10 quarters? And of course, volumes, these are annual volumes. Last year we sold about new home sales about 13,000, then it dropped by 50% to 7,000. Again, just for reference. Next slide. In terms of global growth, so things, even though the market is rallying, just take a note of caution. It's just that economic activity is still slowing down very sharply. So if you look on the left, so this is the US ISM manufacturing, which is in dark blue, and services. So both is also down sharply. So global growth is toppling down quite fast. And also if you on the right is Singapore IPI manufacturing activity is also slowing down. Yeah. The red one is just electronics and the blue is everything, like we mentioned, chemicals, pharmacy, everything. Next slide. Okay, so this one is Marina Bay Sands. We don't cover Genting, but since everyone keeps on asking, so this and Genting only reports results twice a year, so they need to talk to the market twice a year. So it's only Marina Bay Sands, which when Las Vegas Sands announced their quarterly results, where we can have a peek into how Marina Bay Sands is performing, and that should also kind of translate for Genting Singapore. So in terms of the most in terms of the blue line, so this is mass market revenue. That means not the high roller. So this mass market, the slots and the tables. So if you look at the blue line, actually for the fourth quarter is a record revenues, all-time high in terms of mass revenue of 477 million. So the mass market now is 109% of pre-pandemic. But what is doing exceptionally well? I mean, just out of interest, actually the slot machines is doing very well. And also a lot of, partly due to ASEAN, but the main reason why it is doing well is also because of pent-up demand coming back into Singapore. So they saw that phenomena in Las Vegas when they reopened. There's pent-up demand. They're seeing it now in Singapore, and expecting the same thing in Macau after 2-3 years of not being able to gamble, because everyone will just rush in, I guess. The other thing is rolling volume. So rolling volume is in red. So just for explanation, is 7 billion. So these rolling chips. So when the high rollers go to gamble, they actually have to exchange these VIP chips. So the amount of chips change in the fourth quarter was about 7 billion. So it's almost 90% of pre-pandemic. So what it means is that when China reopens, you should expect it to also cross the pre-pandemic levels. They're also looking to spend almost 2 billion the next few years to expand MBS. Yeah, for those who want to know. And okay, next slide. Oh, okay, this is my second last slide. Okay, actually I've done this like a week ago, but just that there was holiday and also I was away for meeting. So this is just our feeling on the ground on Olam. Okay, this is a bit complicated, so let me just explain it here. So on the table on the right, sorry, the chart on the right is Olam Group. So Olam Group is what is being the listco now. So what's being traded now is Olam Group. So Olam Group wants to split into three, essentially two. But anyway, they will split into OFI. So this is the one on the left, which is going to list in London. Nobody knows when's the time, because when the stock market is better, they can list. The one in the middle is Olam Agri, which they are planning to list in Singapore. And the one on the right will be the leftover, not say leftover, I guess that's the balance of the assets, or they're going to call it Olam Global Holdco or Olam International, where a lot of it is mainly all the VC and everything. So the reason, the thesis why everyone's interested in Olam Group restructuring is just that they're hoping, because the market cap now, you can see on the left, the first bullet point is 6.2 billion. And the hope is that they will list both Olam OFI and Olam Agri, which combine once they distribute the shares to shareholders will be higher than the listed company, which there is a high chance. But anyway, just to dial back, there's going to be an IPO of Olam Agri, the third bullet point. It's not clear. They are going to do new shares. They're going to do secondary shares. That means Olam Group sell, and also they're going to distribute to shareholders of Olam Group, Olam Agri shares. The combination, nobody knows. They haven't finalized that themselves. The second key important thing is that this will be listed in the first half, and also it will be listed in Saudi Arabia as a depository receipt, and it's fungible. So that's the key point here. Okay, so in terms of the comment, at least for us, we think they list Olam Agri in Singapore. I'm not sure it's going to make any difference, because I don't know whether investors can differentiate. I can't differentiate Olam Group and Olam Agri in terms of the growth potential. So I'm not sure if they list in Singapore alone, people are going to chase after Olam Agri, since they might, the growth is more or less the same. But the good thing is that the second point is that if they do list in Saudi, then this might pull the valuations in Singapore. I mean, we're not sure, because it hasn't been finalized, the Saudi depository receipt, but because Sarling, sorry to confuse them, because Sarling took a stake of 35% stake, valuing Olam Agri at almost 5 billion. So if that leads, so maybe they might pull up the valuation. So if that happens, then it will be good for investors because Olam Group is 6 billion and this thing could be worth 5 billion. So in terms of the sum, so this is our own estimate. I think more like a guess because what we did was we took 2021 results and then we because they value all these companies at EV, EBITDA, although we're not sure what's the debt because they never split it up. So we think on a combined basis, the valuations could be maybe 8 to 11 billion. So if both of them were to list and also distribute in specie, compared to the market cap now of 6 billion. And then, of course, you also be left with the existing Olam International, which actually could have some net cash remaining because they just, after they sold Olam Agri, the cash will be retained by them. Again, just not to confuse anyone. So the last bullet point is that right now, Olam is paying 5% dividend yield and you got this potential restructuring. So I think, again, we don't cover, but I guess it is worth a bet because you got at least this upcoming catalyst, the Olam Agri IPO, and also OFI, which nobody knows about. And our rough estimate, you can see all at the bottom is about Olam OFI is maybe 4.3 to 7.8. Again, it's unclear because we do not know how much debt is at OFI, how much debt is Olam Agri. They won't disclose. Neither do we know. Of course, this is based on 2021 numbers. We don't have 2022, but 2022, their EBITDA grew about 20%. So there is a bit of buffer, I guess. Okay, next is the last slide. Yeah. So for Singapore, okay, oh yeah, this is just the earnings release. This for everyone's reference only. So upcoming, there'll be a lot of REITs releasing the results, and there'll be the a lot of Keppel and CapitaLand companies releasing. Shaded in yellow will be those stocks that we cover. Of course, Prime is important, and also SGX. So we think also SGX, there could be some upside in SGX earnings because they especially on their interest income. So pre-pandemic and interest, they could actually earn 150 million from treasury income. They only earn 50 million because of low interest rates, but this could triple. I mean, there's potential for this to triple. So these are the two results, at least for me, I'm looking is Prime and also Singapore Exchange. Yeah, okay. I think we can move on to Q&A. Yeah, thanks everyone. Okay, let us take some first. Oh, sorry, let me my camera. Oops. Okay. Okay. Not sure what happened to my camera, but okay. Let me just take some questions first. Okay, Ambrish, when you take the Microsoft before, let me.
Sure, Paul. There was one question about Microsoft. Does Microsoft's PE of 27 look expensive? So it does look expensive when we compare it to NASDAQ PE of about 22. So, but our fundamental view on Microsoft is we are positive, mainly because of its earning visibility. As compared to peers, it's more resilient to the macroeconomic pressures, and mainly because it's most of it relies more on it relies more on business enterprises, and which is more of a need for them in order to be competitive, and they rely less on individual customers. And secondly, there has been a strong growth in cloud computing services as companies they go digitize operations, and then however in the middle term it would be still impacted by its revenue would be impacted by personal computer weakness, as well as in short term by foreign exchange headwinds. So however, we still remain bullish on that because in the long term, it enjoys tailwinds from digital transformation and shift to the cloud. However, later on, maybe Zain could help with respect to a technical view on Microsoft. So that's all for Microsoft. Yeah. Thank you.
Okay, let me just try to answer some first. Okay. Any reasons for comfort? Oh, my favorite question. Any reasons for ComfortDelGro share price so low and extended? I think there was some news, I think from my understanding, apart from other stuff, but there was some news that maybe AirAsia was entering into the ride-hailing app. That was the only news I could find, that they want to come to Singapore to do ride-hailing. I'm not sure how that's going to work because it's really so competitive. They tried to do a food delivery and that quietly disappeared. So I'm not that worried of how much AirAsia can enter into the Singapore ride-hailing market. I think that's my own view. The other thing is, of course, there are some bus contracts up for bidding. So maybe the market is also nervous about the outcome of those. Your view on HRNet, I think for us, we are still positive on HRNet. But admittedly, I mean, with the economic conditions slowing down, there could be some impact. I think maybe there could be some cautiousness of employers taking on more headcount. So that could be a bit of a dampener. But with China reopening, that could be the offset. Again, we'll wait for the results and then we can share more. But what we would just worry about is that when there's economic slowdown, I think no surprise here. I think a lot of corporates, especially for permanent headcount, they might take it a bit slower there. That's our only concern. Could you explain layman terms what the Hindenburg report is about? Yeah, I'm not sure. Sorry, I didn't really go through. I'm not sure Ambrish can, because I didn't really read in detail the Hindenburg report. Yeah, so sorry for that. Yeah, maybe Ambrish can help on that. Okay, the other thing, let me try. What are your views on Genting Singapore fundamentally and technically? Okay, of course, technical Zain will help. I think for Genting, they will still, you're just playing on the momentum, and hopefully they will do a special dividend because they are holding so much cash. I think the momentum can last, my own thoughts, at least up to the next 3 to 4 quarters, because China hasn't opened up, and Singapore only opened up in the second quarter. So year on year, this quarter will also be exceptionally strong. Yeah. So I think it should still do well, but then thereafter I'll be a bit more concerned, because casino gambling, as we highlighted before, it's a matured industry. I think even the management admitted that. But again, if you're buying on momentum, I think the momentum can continue at least the next 2 to 3 quarters. But I'm not sure whether people will rather buy it through Macau, because that is probably the one that has the highest beta than buying it through Singapore or Genting Singapore. Yeah. What's your year-end target for STI? Last year, your target was 250 points off. Mine was 50 points off too. Yeah, mine is like, the good thing about doing target is rolling 12 months. So in a way, you're never off. But for us, we still think it's about 3.5 and 3.6. Yeah, that's our own. But I mean, for us, sometimes we don't really write it in a report or pencil it in, because it's more academic than anything. I think more important is our stock recommendations. So that's why we don't really pay too much attention. Yeah. Also because maybe we always get it wrong. Any views on CSE Global? I don't have anything of late. I know they're doing if I'm not mistaken, a rights issue. Sorry, I don't have any recent views, but their order books are at record levels, so we think they should rebound. Just I think there's a bit of overhang on the rights issue. Sorry, I'm just recollecting from memory. I don't have the exact numbers. Any review update on Uni-Asia? Okay, so for Uni-Asia, I think the fourth quarter could be weak because of the weakness in handy size prices. I'm not sure what's on handy size freight rates. We think there could be a rebound for 2023 as China reopens. But more important, one of the reasons for this is because supply is very constrained. So supply is at record lows. I think about 3 to 5% only being ordered as new fleet. So it just takes time for the supply to materialize. So that's our basic thesis for UniAsia. But again, do note that now UniAsia is a paid research, but in that report, our thesis is basically supply, the new orders to existing supply is I think 3-5%. It's one of the lowest ever. So, but it just takes time because the rates are just swinging based on how the market feels about the China reopening. But longer term, medium term, we think the freight rates should climb up higher because no one is ordering. Because there's also this issue about the type of fuel that to order for the vessels, because no one's it's not clear which fuel can meet all the new IMO requirements. Okay, can I think you want to handle Zain?
Okay, I'll take over for the TA section. Let me just share my screen. Okay, I will start with OCBC Bank. So okay, OCBC is quite strong. So actually we took out the high of last year at around 1293 over here. So we actually broke new highs, but given that it's the first time that we are retesting this high, this could be still be a double top. So we need to see whether a retest of this area will be successful before the bullish momentum continues. The good thing is that we also broke out of this trend line over here, this diagonal trend line. So the resistance also broken at 1280 over here. So if a retest holds over here, then it's still bullish sign. Then further support downwards will be around 1260 level over here that we actually broke out from. So there was a breakout over here, and then we form a range over here before going higher. So that's for OCBC. Then Manulife. Okay, Manulife is also looking good. So we broke out after we broke out of this downtrend channel over here. We also broke out of this downtrend resistance line over here, and we also went above the previous swing low at 31 cents. So it pushed to a high of about 34.5 cents today. So there was a previous swing low over here. I think the main resistance for now would likely be closer to 36.5 cents, which was during the range consolidation over here in November to December of last year. This was the support. So the previous support will likely be a strong resistance over here. And the next higher resistance will be likely at the 39 cents mark, which is also a previous support and also a key resistance during the last quarter of the year, last year. So this for Manulife. PRC Asia. PRC Asia still looking good. It tends to consolidate a long time, then it does a breakout. So over here looks like the previous high was 184 over here, then we broke out. So 184 over here will likely be a support area. For now looks like some currently pausing at 189, so it could well form another range over here, given its tendency. Lower, if 184 does not hold, then next level will likely be at around 180 over here. Around 177 to 180, which was the prior resistance over here that turned into a support. So overall, the big picture wise still looking very good for BRC Asia. Okay, moving on to the Hong Kong counters, HK Tech. Okay, this ETF still remaining in the uptrend channel. The thing is that we broke out of this 460 resistance level, which was a resistance level in July of last year. So we broke out, and finally today is a red candle. So let's see whether the pullback to this level would create some form of support. If not, we could find support at this trend channel support as well. So that could be around 453 to 460 over here. Then meanwhile, resistance looks like around 480, which is a high created last Friday, which matched a level, horizontal level last time. Then going further up, will likely be at $5, which is another horizontal level and a high in June of last year. And then next one is 10 cent. So 10 cent, we push out of this key $400 resistance level. Then but today look is a red candle with increasing volume, and looks like we sliced through this level again. So that's something to take note of. So for now, I think the immediate support likely be this trend line over here. So the support could be around 385 over here. So let's see whether this provides some support in this uptrend. If not, the next support level could be around maybe 363, which is a horizontal level over here, a support in June last year. If you do manage to break higher highs, I think the next resistance level could be around around 420, which was a support last time. And then moving further up will be around 443 for 10 cent. JD.com. JD, after hitting the 253 level, which was a resistance in July to August of last year, we currently did a pullback. And good thing is that we still found support in this uptrend channel over here. So the uptrend is still intact. Then we are bouncing up to 250 over here, and currently pulling back a little. So for the uptrend to hold, we still see the uptrend channel providing support over here. For now, it looks like starting to see some selling at 250 onwards. So that could be a significant resistance level. But if we do break higher, then I think the next key level would likely be around 275, which is two swing highs in April and June of last year. But if we break down of this trend channel, I think the first support will likely be this 226 swing low over here. Then followed by 213 over here, which is another support level in August over here. Next one will be Ping An Insurance. So Ping An also hitting some resistance at around near the $65 mark. So this was a swing high in February of last year. Then currently pulling back a little. The immediate support likely be at near the $60 level, which was a horizontal level over here. Which also swing low. Also some support in the middle of January. Then we also have this uptrend trend line support, providing support over here as well. So if you pull back, likely we are continuing to find support over here around near the $60 mark. But if you do get lower than that, I think the next level to look at is closer to the $56 to $57, which is a support, rather strong support over here at the start of last year. So this for Ping An. Look at Microsoft TA. Microsoft actually looking not bad. So after the breakout of this short downtrend resistance line over here, we broke out. Then we did a positive retest, then supported. We went back above. And another thing is that this 245 horizontal resistance level was also broken on Thursday last week. Then so as long as you can hold above this level, I think it's still a bullish signal. Then the next level could be maybe at 255 over here, then followed by near the 263 level over here. Okay, Prime REIT. So Prime also looking very good. So in this downtrend channel, it managed to break out. Then it reached a high of 53.5 cents today. Then which currently I think might face some resistance based on the swing high in November of last year, where there was a increasing volume over here. So and was a previous support level over here in October last year as well. So for now, looks like facing some resistance at this level, but if it continues to go higher, the next resistance likely to be around 55 cents to 56 cents level over here. Immediate support, if it does a pullback wise, I think the strong one is likely to be at 45.5 cents to 47 cents area, which was a key support in the last quarter of last year over here. So if it does a pullback, I think they will retest this support and as well as a back test of this downtrend channel. So that might be a good support level for Prime. Next one, iREIT. iREIT also bullish. So we broke out of this downtrend resistance line over here at 55.5 cents. And we hit a high of 58 cents last week. So this we tested a rather strong previous support, which was now a key resistance at over here. Then we're currently doing a pullback. So I think as long as we can stay around 55 cents level over here supported, that will be still bullish sign. Means that we are still out of this downtrend resistance line. If we fall back downwards, I think the strong support will be around 53 cents to 53.5 cents, which is the previous resistance over here. And then we also have another uptrend line support over here to note for iREIT as well. So if we pull back even further, then this might be a good support as well. Okay, then the next one is Thai Beverage. Okay, Thai Beverage, I think currently looks like doing a lot sideways direction after we hit the strong resistance area at 70.5 cents to about the 72 cents level over here. So currently looks like a double top at 72 cents level tested the second time. Then the swing low was at 70 cents mark. So we might do some range trading over here. If we fall below the 70 cents mark, I think the 68.5 cents mark will be the next key support level, given that it was a resistance level last time in August last year. Then stock actually consolidated at this resistance before it broke out. So a retest of this 68.5 cents level would be, I think, would be quite a good support for Thai Beverage. Okay, then the local banks, DBS. Also, DBS currently at hanging around at the strong resistance area near the $36 level. So it's like the fourth time I think we are testing this level over here. So let's see whether you can maintain above here and possibly manage to go even high, make a higher high this time. So I think following from this trend line resistance wise, I think if it does manage to break out above $36, I think next level could be at 37. So as for the immediate support wise, if this holds as a resistance, if you do pull back, I think currently the support will likely to be around the $34 70 cents to $34.80 level, which matches this channel support trend line over here, as well as the previous swing high over here, this level, horizontal level as well. So still looking quite good for DBS. Then UOB wise, I think UOB is currently the laggard among the three local banks. So because there was a range formation over here, couldn't crack the 31.30 level, and then this support at $30, around the $30 to $30.20 level was broken, and then we are currently doing a retest. So over here, this red color zone, previous support might face some resistance over here. If you are unable to break above to retest 31.30, then that might be a bearish sign, which could signal for maybe a retest of these lows near the $29 level, which is a support zone. Yeah. Okay, Yangzijiang Shipbuilding. Okay, it looks like after the sell off, we are currently doing looks like a uptrend channel or maybe possibly a bear flag formation over here. Even currently we are in a downtrend formation. So I think we need to stay above this support around 125 need to hold. 125, 126 needs to hold, given that this was over here looks like there's a horizontal resistance level that we broke out from, but then we subsequently came back rather quickly with high volume. So that's not a very good sign. So let's see whether 125 over here can hold for possible hours momentum, maybe to retest this 131 level over here or 133, which is this channel resistance over here. If not, we might drop out and maybe possibly retest the lows around 114 over time if the bearish momentum actually continues for Yangzijiang. Fraser Logistics and Commercial. Okay, this one looking good. So ascending triangle breakout over here of the neckline at 118, then we reached a high of around 129. So this was a prior strong support level over here for the whole of last year. So retest of this prior strong support region will possibly act as a strong resistance for now. So possibly some pullback for now. Then the support, immediate support now could be around 123 to about 125 level. So based on this horizontal level, then if it pulls back even further, I think maybe we could retest this horizontal breakout level or this uptrend line support over here as well for Fraser Logistics. Okay, the next one, Escort. So Escort, a nice uptrend channel over here. So for now, I think we tested $1.12, which is this swing high over here in September with a high volume. So for now, if it doesn't clear, then there might be some resistance at this level. If not, the next key level will likely be at around 115 over here, this horizontal resistance level last time. And that will match the uptrend channel's resistance over here as well for Escort if you push further up above 112. Then for now, the support likely to be at the strong support likely to be at 107. So this was a swing high generated over here in December of last year. Then we broke through. The retest over here, we found support. And last time 107 over here was a support level over here as well for Escort. So retest over here might find support. And then if you pull back even further, I think we'll be looking at this channel support over here for Escort. Okay, Genting technical analysis. So Genting holding up in this uptrend channel over here. We test the resistance for now is at 102, which looks like a double top for now. Then we are retesting the swing low generated last week at 97 cents. So for now, if this level hold, we might be doing a sideways range pattern or continue to stay in the uptrend channel. But if we don't, then there might be signs that this could be maybe a start of a trend reversal. Then the strong support lower will be around 92 cents to about 94.5 cents level over here. So this is based on the horizontal levels last time. Yeah. So the 102 level looks like the resistance for 102 level look like is over here, this swing high generated in February 2019. Then current support 975 is April 2019 swing high level. Then the next key level lower at the lower end is generated in March 2021 at the 92 cents level. So it looks like it follows the horizontal levels quite closely for Genting. That's maybe something to look out for. Okay, Hong Kong land. So for now, bullish, but this could be a possible wedging pattern over here. Then for now, resistance could be around the $5 to about 5.10 mark over here, based on this wedge resistance, and this could be a retest of this previous uptrend line support over here that was broken down. So a retest over here might have some resistance over here near the 510 level. But if we do break through the resistance higher will be near 520, this swing high over here in July. As for the immediate support, if we do a pullback, I think possibly around 490 over here will be able to hold for Hong Kong land based on this wedge support over here. Okay, DFI also similarly forming like a wedge pattern over here. So for now, looks like having some resistance near 330 based on the wedge resistance. If we do 330 is also a prior support area in August to November 2021. So this previous horizontal support resistance look like support level is acting as a resistance for now. The next key resistance level is possibly near 350, which is a horizontal resistance in the same period of 2021. And for now, support possibly looks like at possibly 318, I think. So this swing highs over here at the start of this month, and then the wedge support over here as well. Then the good thing is also that we actually broke out this very long resistance zone over here around 297 to 309. So if it does a pullback further to this zone, right, I think that will provide a good support as well, given that we actually consolidate the resistance over here actually consolidated for a very long time. Okay, UOL, we had an ascending triangle breakout over here around 680. Then we reached a high of currently about near 711. So over here looks like there's a possible resistance zone. So given that it was a prior support zone last time, around 710 to about 720 level area in June to August of last year. And then there's also possibly a diagonal downtrend line resistance over here that could be acting at 720 over here as well. So this for UOL currently possibly we're entering into a resistance zone. Then support wise, I think the first level of support could be around 690 over here, which is this support in September of last year. Then followed by 680, which is this ascending triangle breakout neckline over here as well. So this for UOL. Then Bitcoin and gold. Okay, Bitcoin has been on a tear. So currently still pushing higher in this uptrend channel over here. So for now, maybe resistance near 24,000 level. Then support could be maybe at 23,000 over here. So then if it breaks out of this channel, right, I think the strong resistance could be lying at 24.3K to 25.3K. So over here in July to August of last year, you can see there's a lot of upwards over here. That will be a strong resistance zone for Bitcoin over here. Then if you break down of this uptrend channel, I think the immediate support likely to be at 22.4K, which is the swing lows over here, and then retest of this swing high resistance in September of last year. Yeah, then followed by maybe 21.3K over here if you go even lower. Yeah, based on this swing high level in November last year, and then the resistance in mid of this month for Bitcoin. Okay, gold. So gold also very bullish. So actually broke out of wedging pattern over here. Then currently looks like doing some sort of sideways pattern. So for now, I think resistance wise, could be around 1950 to maybe 1975. So I think over here you look at the historical levels. 19 this zone was a resistance in November 2020 as well as January 2021. There was two peaks over here. Then over here in April of last year, we also had a generated peak over here before it went down. So over here likely to be the resistance zone. Then yeah, then 1975 fighting over here is the 78.6% retracement level also. When we take the high at 2070 and the low at around 1617. So this for gold. Then support likely to be at around 1900 psychological level, so about 1920 level. So that will be the prior support and resistance over here for the horizontal level, spanning in March to May of last year for gold. Okay. Singtel looks like we currently trading outside of this downtrend channel over here. But looks like facing some short-term resistance around the 257 high over here. So now, soon I wouldn't still dare to confirm that it's actually started a trend reversal, because there's also this key uptrend line for Singtel over here. So unless we manage to break out, have a bullish candle over here and then over here again, then I will say that there's a chance that could recover back up. For now, maybe might be doing some range trading over here, given that looks like in this downtrend we have stopped making lower lows over here. So 245 over here will be a strong support for now. So this could be maybe a range over here. But if it break down even lower, if 245 doesn't hold, right, I think the strong support downwards will be around 230 to about 239 zone over here, which was held twice in last year. Yeah. So this for Singtel. Okay, China aviation. Bullish thing is that we actually broke out of this long-term downtrend resistance lines since 2017. Then currently forming a uptrend channel over here. So that's still a bullish sign, but looks like we are just clinging on to the channel. So for now, if we do break below, then that could be a reversal signal. Then for now, the support at around 995 to $1 over here, these swing lows over here. Then the next lower support could be around the 93 cents to 94 cents area, this another swing over here. As well as that will be a retest of this downtrend resistance line as well. And as well as a previous horizontal resistance level over here. Then if we manage to break out this 108 level, I think the next level could be around maybe at 110 to 111 level. That will be the resistance in June 2021 over here. So that's for China aviation. is SAM Industries. So this one still looking good. So when we approached the swing high at around 350 over here, we actually tested multiple times, and then there was this breakout that formed over here. So that's good sign that we cleared the resistance. So the next resistance, based on this trend line, could be maybe at around the 367 level over here for the short term. Then I think the good support over here, if you do a pullback, 350 previous resistance over here, that will be provide a good support for Semicon Industries. Corp REIT. So this one looking good. Today looks like there's a fresh breakout over here of this downtrend resistance line. And we also broke out of this 63 cents horizontal resistance level as well. So that's a good sign for now. The immediate resistance probably at the 69 cents level. So that previous swing low support in July and September of last year. So that will be immediate resistance. Then the support will be at the 63 cents level over here. And ComfortDelGro after breaking down this trendline support over here, it looks like we currently form a base at $1.15, and we subsequently rebounded. So I think for now, resistance could be at $1.20 to $1.21, which was a prior support over here that we put down. So this retest could find some resistance. Then another thing is that we also have this downtrend resistance line acting over here as well. So there could be some resistance at $1.22 to $1.23 as well for ComfortDelGro. I think for now, maybe if we find resistance over here, we might try to do some range trading or see whether we can form a higher low over here. Then there might be a chance for some recovery in the stock. If the 114 level does not hold, right, I think we could be heading to 111. That's based on the historical level last time, where it was a strong horizontal level. So it was a resistance in 08, and then key support in 2012 for ComfortDelGro. If you do breach the recent swing lows of $1.14. Okay, ST Engineering. ST Engineering is good because broke out of this 352, looks like a ascending triangle pattern. Then we just shot up to straight away test the strong resistance zone over here, which was prior support. So 380 to 390 zone over here, possibly it'll be a strong resistance zone. So this was a support in March to August of last year. So for now, might be facing some resistance wise, then the short-term support likely to be at around 365, I think, over here, based on the horizontal levels. And then there was a consolidation over here as well. So 365 to 370 probably be the short-term immediate support for ST Engineering. Okay. Capital Invest. Okay, Capital Invest today, we retested this downtrend resistance line over here. So we found resistance at the we hit a high of $4.04 and currently pulling back. So we might have some resistance over here. If we subsequently break out, still continue to break out above this resistance line, and the next one resistance could be at 410, this swing high over here in August. Then another one to note will be 414 in April of last year as well. And for now, if you do pull back, I think the immediate support likely to be around 386 to about 390, this level here. then there will be a retest of this uptrend channel as well. So as long as you hold above this uptrend channel, then there will still be a bullish sign for a possible breakout for Capital Invest. Your views on iFast and EM. Okay, iFast, I think for now still quite bearish. So we broke down on this triangle pattern over here, this strong red candle, and then currently we found some support near the 520 level. Then I think there could be a possible continuation of the bearish momentum downwards if you don't break above 540, these short-term swing highs over here. Then the next key support level will be around the 480 level over here with prior resistance level over here. So that's for iFast. Then AEM short-term wise, I think could be bullish because actually after this pullback, we actually broke out of this downtrend resistance line. The breakout, then there was a retest. So as long over here, we managed to stay above maybe 340 over here, right? Then continue to go back up and we clear the 350s, 358 swing high over here, then that will be a good sign that it's a successful breakout. If you fall back then the short-term support will be at 327 to around here, the swing lows, and lower end based on last year's support was around near the $3 level over here in October. So that's for EM. Okay, next one, the other electronic stocks like UMS. So UMS, I think for now, it did tested the strong resistance at $1.34, then currently pulling back a little. Then for now, the support will be around, the strong support will be at 128, which is this horizontal level that we broke out of. So I think for now, still looking bullish, given this stretch, it's quite bullish. As long as this level can support, I think there's a chance that we retest this 134 level again, and maybe for a possible breakout next time. Franken also looking good. Also just the retest of this 119, 120 swing highs in November of last year, following an ascending triangle breakout over here. So for now, I think as long maybe we do some consolidation over here of higher lows, then there's a chance that we do take out 120 over here, then to push higher to maybe test these swing highs at 130 to 131. So this one's still having a good chance. And venture also good. So venture actually broke out of this early on. Venture actually broke out of this inverse head and shoulder pattern, breaking out of the neckline at 1790, and then also clearing $18, close to $18.40, and then currently sideways over here. So the next resistance level to note for venture will be around $18.60 to $18.70 over here. Then for now, let's see whether this prior resistance can become a support near $18.30 to $18.40. If not, maybe we could come back support at 1790 or even a back test of this neckline over here. But still looking bullish over here. So it looks like the SG Electronics stocks are displaying some bullish signals that one can keep a close eye on. Yeah. So next one will be Bank of China. I think Bank of China is looking good. So after it broke out this 290 resistance level here, we just shot up. Then we also cleared the $3 psychological level, which was a prior resistance over here in April 2018. So the next resistance level likely be at close to 317 to 320 level over here. So that's for Bank of China. And then by two, okay, I think this one still looking good. So you can see there's still an uptrend channel that's ongoing for Baidu. So for now, possibly some short-term resistance near 145 to 148. So based on this channel resistance as well, the swing highs over here back in August of last year. Then if you do clear, then I think the next key resistance level likely to be at near 150, 153 to 155 over here. Yeah, so that's then short-term support wise, I think likely to be near 130. Yeah, based on this horizontal support in August last year, and then that will possibly retest the channel support again for Baidu. The JD Logistics. I think for now there's maybe some resistance near $17.80 level. So you can see previous support in March of last year, then we tested once over here, then it came down. Currently looks like we're gonna test it again. So there might be some resistance that's gonna be acting on it. Then for short terms support wise, I think that could be maybe near $16. So these are the swing lows of the consolidation for this month. Yeah, and then retest of this uptrend trendline support over here as well for JD Logistics. Okay, I think next one is sets. Okay, sets I think still looking bullish. Given that there was a successful breakout of this downtrend resistance line at 287 to 88 over here. Currently looks like we're testing the swing highs at 2305 over here. Looks like sideways for now. And the next resistance level likely to be at 315 over here, then followed by 340 for sets. Then short-term support wise would be likely to be the likely to be near 296, I think. So this because this was a resistance over here, and then there was a prior support over here that was being broken. So this will be quite a level to note for assets. And Olam still in uptrend. So there's this uptrend channel over here. Then for now it looks like meeting some resistance at 160 to 164, given that it was full swing highs last year, and then was a prior support that was being broken down. So over here there will be quite a significant resistance for Olam. Then we can also note resistance using this uptrend channel over here. So maybe 168 over here, there will be resistance also if we do break out of 163. For now, short-term support looks like at 156 over here. So based on the range support over here. Then if we do pull back further, could be at 150 based on this horizontal breakout over here. And then that will bring us closer to this uptrend channel support as well. Okay, Hang Seng in
Zain, will you take a break first?
all right.
Can Ambrish, can you take on the Microsoft question?
Yeah, sure, Paul. So there was one question with respect to Microsoft. For Microsoft, what is the tax applied? Marginal tax or effective tax or corporate tax? So for Microsoft, it is we have applied an effective tax rate. So on whatever the its earnings and other incomes, and we exclude the tax a percentage of about 18 to 20%, and on its profits before tax. And secondly, there was one question with respect to Heidenberg report also. Can I try that?
Sure, go ahead. Yeah.
Yeah. So for Heidenberg report, Heidenberg, it's basically a US-based research firm, and it is known for its short-selling reports, short-selling bets on companies. And previously, it has targeted Nikola, Lordstown Motors, as well as Clover Healthcare Company. So for the report, what they have highlighted was that the share price for Adani Group, it was overpriced, and it was trading for a few metrics like price to sales. It was trading as much as over 100 times. And secondly, it had a significant debt. And also the promoters, what they had done, that they had pledged their shares in order to take on additional debt. And also they have the management team, it has committed frauds, and they have manipulated the stock price over the last few decades. And also what the regulator, the SEBI, the regulator, it has highlighted that it has about 25% of the shareholding should be by the public shareholders. However, for Adani, it's like 74% holdings are from the promoters. And as a result, there is a chance that the stocks could be delisted, mainly because if that goes to 76 or something, that because of regulatory concerns, it might have to taken back private. Yeah. So hope that answers the question. Thank you.
Okay. Oh, sorry, go ahead.
Oh, yeah. So I think there's one question on ST Engineering. So I'll probably take that question. What's the FA view on ST Engineering? Yeah, so for most of last year, the main impact on ST Engineering is because of the rising interest rates. And what that has done is it has really affected the interest cost for ST Engineering, because they had a lot of commercial papers when they acquired they made the US acquisition. But with like what my team mentioned during the briefing, with interest rates now looking like is near the peak, so that kind of fear is also elevated. And so you see a consequent rally for ST Engineering. Yeah. So that's all for me for ST Engineering. Back to you, Paul.
Oh, okay. Yeah. Thanks, Terence. So just to go back on the Hindenburg, yeah, any Hindenburg, Yeah, I didn't realize about the Wilmar connection. So just for the benefit of everyone, so Wilmar last year IPO'd Adani Wilmar. So Adani Wilmar has a 50-50 joint venture with Adani. And when they listed, they sold 6%. So Wilmar still has about 44% stake in this. So in terms of the report impact on Wilmar, actually it's not very meaningful. So the first thing they question, at least for Adani Wilmar, is the valuation. So Adani Wilmar is trading at 90 times PE, so compared to the peers of 30 times. So maybe it's a bit overvalued on that sense. But in terms of the leverage, it's actually better leverage than peers. So their net debt to EBITDA is 2 times versus peers about 3 times. The other thing is on this shareholding spread. So Wilmar has already indicated that there's a plan with the authorities to at least sell by February of 2025. So there's already a plan. So there's like what Ambrish mentioned, you need 25% float. They only sold 12, but there's a plan to kind of sell to meet the 25 by February 2025. So that's not an issue. And the other thing, I'm only referencing anything that impacts Adani Wilmar. So the fourth issue they talk about is just analyst coverage. You know, they said that a similar company has 43 analysts, Adani has 7, right? Still a lot, just IPO. So in terms of the impact for Wilmar, I don't think that's very meaningful because I don't think most analysts don't do sum of parts. So I guess that's the reason why we're very careful when we do sum of parts. That means using the market cap of associate or whatsoever to put valuation. So most just do EV/EBITDA or PE for Wilmar. So, and the report didn't really shine much negative light on Adani Wilmar apart from maybe the valuations. Okay, let's try to run off the rest for fundamental, then we just leave the remaining to Zain. Would there be any electronic manufacturing stocks play this year? What's your view on UMS and what is the view on Singapore electronics? So for us, we think maybe the electronics, at least on the fundamental view, probably got one more run after the fourth quarter results. Then after fourth quarter, we'll be very cautious. Some of the reasons is, of course, the currency. So the US dollar has dropped to like 5-year low versus Sing dollar, and this will impact the results. Of course, it's a good time to go holiday too. But and the exchange now is about 1.31, so it's a 5-year low compared to Sing dollar. Because most of the electronic companies, they're billing in US dollar. The second thing is we are worried about the demand for the electronics company, especially semiconductors. Semiconductors is being hit, as we mentioned in our strategy session, is by Chinese demand. So because a lot of the semiconductor manufacturers can't sell to China, at least for the high end now, that probably shave off maybe 10-15% of revenue, which is a lot because it is 10-15 percentage points. The third thing is semiconductors also being affected by memory, slowdown in memory. So I think after the fourth quarter results, we will be a bit wary because that and the whole global economic conditions also slowing down. So we are a bit wary for electronic stocks. Okay, let me try to answer as much as I can. Then I hand it back to Zain. Please advise Amazon. Okay, I'm not sure this is DA, I feel. Has recovery finally come to equity market, or is it just dead cat bounce what we are seeing recently? Yeah, we are a bit more cautious about this really because economic growth is still sliding quite sharply. So I think this is just a quick repricing that things are not as bad, especially out of Europe. The growth isn't as worrisome as people expected. And no interest rates have peaked now. So that's why you see interest rate sensitive stocks like REITs start to rally. But we are a bit wary. I mean, we think it's probably more like a I don't know, dead cat bounce rally or so forth in the very near term. Because you still until we see economic conditions improve, some momentum. So there is a momentum in the share price, but there's no momentum in the economy or fundamentals. So unless we see some bottoming up of economic conditions, then maybe the rally can be more sustained. Yeah. So it's very skewed towards like REITs because they're interest rate sensitive. Is there any bad news for Singtel? There isn't any bad news. The only news is I think there's a bit of sector rotation, which is I think we all know, probably moving out. If you look even in the US, the consumer staples and so forth, those are the weak spots. So investors are just shifting out of defensive names like telcos or consumer staples into more cyclical names. And of course, China, everybody's just going buying Chinese stocks. Okay. What do you mean by overhang? So overhang, what we're just trying to say is maybe this could be the event that is holding back the share price. Like let's say Sembcorp Marine. So maybe, of course, it isn't so, but maybe people or Keppel Corp, people are worried that the merger will not happen. But now that the Sembcorp Marine shareholders has approved the merger, so that will clear the way, and the merger is of course positive for or sale is positive for Keppel Corp. So it's like an event that is holding back the share price, an unknown which the market is not clear of and stuff. Like an overhang for Olam would be whether the OFI gets listed in London, because nobody knows, even the companies doesn't know. Okay, what is the equity risk premium for Singapore? Actually, I'm not sure. Sorry. Equity risk. I need to get back to you. It's a good question, but I don't really, frankly, I don't really look at all these this kind of measures. Yeah, but we can get back to you. We'll probably maybe post it on our, because you can just go to Bloomberg and just type equity risk premium, we get a number. We'll probably post it in our on our community. Do you see US tech stocks continue to rally? I think I hand it over to Jonathan.
Sure. Yeah, so I guess the short answer would be not really. In terms of rally, in the near term, I don't think we don't think earnings is really going to be that great. At the same time, we're looking at a lot of guidance for and expectations for this year's earnings amongst the tech stocks. At least revenue and earnings growth is really going to be quite limited, so it's going to be quite difficult for tech stocks to continue rallying, much like what they've done so far this year. Also, there's so much uncertainty with the Fed. How many rate hikes are they going to do this year before they taper off? So I guess a lot of what I would look out for guidance, company guidance, as well as the Fed's guidance and what they expect for the company. I think that will probably affect the market quite significantly. Thanks.
Okay, thanks, John. I guess the only one good headwind for US tech stocks is just the currency is weakening. So this could like what Ambrish mentioned, Microsoft earnings they actually grew 7%, but 5 percentage points was taken up by currency. So maybe that would be one tailwind for them as we go into next year. I'll just answer two more, then we can hand it back to Zain to Annie at one. Any view on whether the Fed might pause or pivot this year? So we still think there will be 3 rate hikes of 25 basis points. That's our view. As we mentioned earlier, it's because even at this current trajectory, we don't think the inflation will go below the 2%. And also, I think thematically, I think the Fed will be very cautious after they said that inflation will be transitory and they make such a big mistake out of it. So I don't think they want to make the mistake again. And the final one is any FA view on REITs? Yeah, sorry, we don't have anything on REITs. They hardly meet analysts. They don't do briefings. They are like basically radio silence to everyone. So we really do not know of anything or anything on REITs. Yeah. With that, I think we answered most of the FA. So I think I'll hand it back to you, Zain.
Yeah, I'll continue with the TA. So okay. I think there's a question on HSI. So I think HSI wise, we retested the previous quite a strong resistance zone at 22.4K to about 23K this zone over here. So over here, we tested it over here today. Actually, end of last week today. So today there's a red candle over here, and there's also this rising wedge resistance over here. So might be facing some resistance for now for HSI, I think. Then short-term wise pullback, I think a strong support wise could be near 21.5K level, which is this the support over here we saw in the consolidation over here. Then there will be a retest of downtrend line as well. So this is a downtrend line since 2021. So we actually broke out of it. So retest over here might provide some support for HSI. Then we also have this wedge support over here as well. So that will be like a triple confluence of support over here for HSI. Yeah. So this is my view for the index in the short term. Okay, next one is on CICT. So CICT looking good. So we broke out of this wedge and the downtrend resistance over here. Then we rallied to a high of 218 today, then encountering some selling. So I think over here there was some strong resistance over here at 218 to about 220 level over here. So looks like we are facing some short-term resistance over here. I think the strong support over here now will be near the 208 to 209 level, which is this horizontal level that we broke out of. So if you do a retest over here, I think there will be a good support for CICT. BYD. Okay, BYD in this uptrend channel over here, currently looks like we are at the possibly at the channel resistance around 250. Then further up, there's also another resistance level possibly at 260, which was the prior support from July to August of last year. So that's something to take note as well. Then for short-term support wise, I think we could find it maybe near 220. That would probably be a good support given that it was a swing lows over here. Then it was also prior resistance level over here as well. Then if we pull back further, then I think we could reconnect with this channel support as well for BYD. That would probably be a good support also. Okay, SIA. I think SIA. Okay, SIA currently I think looks like doing consolidation over here for now. So I think the next resistance level likely to be at $6 to 606. So so this was a prior swing high over here in February 2020. Then it was also a significant horizontal level support in June 2019 as well, on August 2019. So then short-term support wise, if we do pull back, I think 587 over here, given that it's a nice horizontal support over here in February 2020, that will probably hold SIE if it does a pullback. And given that it was a resistance that broke out over here as well. TA for REITs. First Resources and GSD. So REITs, I think currently looks like just nothing much, but there could be resistance based on this trendline downtrend resistance. So maybe 24 cents mark, there might be some resistance if we do test this level. Then support wise at 215, I think over here there's a support. And we broke down a bit, then we recovered back up. So 215 over here will still be a support for REITs. Then Next one, First Resources. I think this one looking okay. So actually broke out of this downtrend resistance line. Then currently looks like we are doing maybe possibly some back test. So if this is successful, with maybe 144 level hold, and I think could be looking at a possible reversal over here. And the next key resistance upward would be probably at 155 over here. If not, we could possibly go back down, then we could be looking at 137 to about 140 at this support zone again. GSD. I think this is quite illiquid, so that's why the chart looks rather erratic. So but from what I see for now, looks like possibly some resistance, given that there was a prior support in over here around 235 to about 237 over here, this support zone in May to June of last year. Then we are retesting it again, so there could be some possible resistance over here. Then the next significant level probably at 242 based on the support that was broken in March to April of last year. And if you go down, I think the strong support probably near 230, I think. So this was a resistance, then breakout, then retest over here. So there will be a good support level over here for GSD. Keppel Corp. So I think Keppel Corp for now looking okay. We actually broke out of this downtrend channel over here. We recovered back up to this big main trend channel. So I think it's maybe possibly a similar pattern to what we observe over here. So there's still possibly a bullish sign. So I think short-term wise resistance could possibly be this swing high at around 770. Then short-term support probably be this 740 resistance that we broke out of over here. So that's for Keppel Corp. Ascendus. Ascendus was looking good. We broke ascending triangle bullish pattern. Broke out at 283. So short-term resistance wise, based on the swing high over here, 292, there might be some resistance, but the next level probably be at around 299 to $3 over here. Then short-term support wise, a good one will be at 283, this level that we broke out of over here. Okay, I think I'll cover Amazon and Alibaba. Amazon probably on the US technical analysis session tonight. Let me just do Alibaba. Alibaba for now, maybe we are encountering some possible resistance based on this trend line over here. Then that probably a resistance at 118. So 118 to 122, I think last time I said there was possible resistance based on the swing highs in March to July over here. And currently, I think if it currently looks like pulling back, then some support probably I expect it around 106, given that this is a prior resistance level that we broke out of. So possibly if we do retest here, we should find some support over here for Alibaba. Okay, best work. Best work, I think the upward momentum still looking good. So there was a bullish wedge pattern, and we're just continuing to charge higher for now. I think short-term resistance-wise, we can look at this swing high over here that was at around 255 and 255, and then another one at 266. So I think short-term wise, you can look at this being the short-term resistance levels. Then support-wise, I think we can maybe look at 233. So this was a resistance over here, and then we also see there's some support being also here for Best World, the short term. Okay, I think we are unable to answer the rest of the questions. Feel free to post your questions in our P3 community, our Poems 3 technical analysis community group. I will answer all the TA questions. Yeah. So I think that's all from me today. Is there any Paul, do you have any closing remarks?
Yeah, okay. Can you just post back the P3 community? So just I'd like to thank everyone for your time and have a good week ahead. Some of the questions that we answered here for the fundamental analysis questions, we will also post it up in our P3 community. So that if you want to have reference, or maybe because we spoke too fast and you couldn't follow, so you can just refer to that. And of course, if you have other questions, you can just go there and also ask, like for instance, technical and so forth. So with that, I'd like to thank everyone and have a good week ahead, and do join some of our webinars if you have the time. Thank you, everybody. Take care.